As of late October 2024, global markets show mixed fundamentals. In Europe, Germany's DAX is experiencing volatility with inflationary pressures and high energy costs weighing on earnings and manufacturing outlooks. Although stabilisation hopes persist, Japan's Nikkei faces uncertainty tied to yen fluctuations and the Bank of Japan's potential policy adjustments, though some strength is coming from technology and industrial sectors. In the US, the S&P 500 is enjoying gains buoyed by robust earnings and the soft landing economic narrative, yet high investor exposure suggests vulnerability to a pullback. Meanwhile, the NASDAQ is seeing relatively cautious positioning as investors weigh tech earnings against macro risks like rising bond yields and high valuations. Okay, folks, welcome back to another update on the world markets. Before we go any further, make sure you hit that like and subscribe button to support the channel. So here we've got the DAX, the German DAX, on the monthly, the weekly, and the daily trend. So we're looking at the CCI still above the moving averages on the monthly, and it's still edging higher, well above its moving averages on the price chart. On the weekly, that's just broken into that moving average range of the CCI, even though the price is still above its moving averages. But notice if I zoom in, we've got a bearish movement on the CCI, lower highs versus high highs on the price, and that's a bearish divergence. So at some point we may see a pullback coming further to the downside. We did have a pullback here earlier. You can see there it touched our 23-38% target range and it bounced from there. So at the very least, if we drew a Fibonacci on this one on the weekly, assuming it starts pulling back from where it is at the moment, of course it could go higher, our minimum retrace level will be that 23-38% target range. That's the minimum. Of course, could go further, but we'll play it one day at a time and see how it goes. Now, looking at the daily chart, you'll notice we had a bearish divergence here, almost a double top on the CCI versus the price, higher highs on the price. We had our Fibonacci drawn here earlier. This is independent from the weekly, by the way. They're all in divergence, are all independent from each other on different time frames. Here we had a 23-38% level. It hit it, touched it once, bounced, and then it's broken down further, closer to that 38% level. We're currently there at the moment. You'll notice the CCI is broken below the moving average, so still bearish outlook at the moment on the daily. Now, if we go to the intraday charts, again using the daily as a reference, we only take short trades. So if I turn on the short arrows, you can see how the latest one would have been at that point there when the CCI broke below the moving average range, and also the price broke below the moving average range there. You would have gone short, and it'd still be in a trade today. And there's a couple of exit points you could have taken. I prefer to take the exit when CCI breaks into the moving average range there, because that brings it really close to that low, and you re-enter it once it breaks out of that range again. So pretty much entering near the same exit point. So you would have entered it again there, and again close it out when it entered at that point there, and re-enter it there, and you probably would have closed it out there. So you would have had 3 or 4 little trades there. Now, the other exit strategy would have been to close it when the price breaks into that moving average range. Now, you've got to be careful of that, because sometimes when it does reverse on those moving averages of the price chart, it does actually come up pretty quickly, and you may lose a lot of your returns. Again, each to their own. Now, also, you do notice we've got a lower lows on the price versus higher lows on the CCI. That's a bullish divergence. So assuming it starts pulling back from there, of course it could go further to the downside, but let's assuming it starts pulling back from there, we're going to see a pullback from that low to that significant high before the divergence started. Our minimum retrace level, again, will be that 23-38% level. So that's the minimum retrace, assuming it pulls back from where it is at the moment. Now, the CCI could still rise and this price could still fall. So again, we've got to wait for it to break higher, somewhere in that midpoint to break higher and then into that minimum retrace level. Now, we covered the Japanese Nikkei recently, but you'll notice I'll cover it again here on the monthly. It's still in that moving average range of the CCI, and the price seems to be consolidating at least, if not falling back. On the weekly, it actually broke down, hit our minimum target range. You can see there's a bearish divergence at that point there versus high highs on the price, and it bounced out of there. So now at the moment, it's struggling to make highs or even lows at the moment. So still in that sort of consolidation area. On the daily, again, it's in that consolidation between that support and that resistance. And at the moment, it's actually a very slight break above the CCI moving average range, giving us a very slight bullish movement. So again, if we go to the intraday charts, we only take long trades, and you would have taken a long trade at that point there. No, you wouldn't have, because notice you would not go long because the CCI is falling below the moving averages. You'd only have taken long positions when the CCI breaks above the moving averages in line with the daily chart, going long only. At the moment, avoid going long or short. Looking at the trends on the S&P 500 on the monthly, it's still bullish. It's well above its moving averages there, and nice big bullish move on the price chart as well. Now, there is a bearish divergence on the monthly. It's a very long-term bearish divergence between that high and that high. It's a lower, if I zoom it out to there, it's a lower high than that point versus the price chart. So we still got a bearish divergence playing out on the monthly, so just be very careful of that. We expect a downturn any time. On the weekly, likewise, we've got bearish divergence. You can see there the CCI is declining. Those highs are declining versus the price chart. So again, we did have a, if I zoom in a bit, just to zoom in a bit, we did have a almost a double top there on that CCI range, and those double tops are considered bearish versus higher highs on the price. It broke down, hit our target range. Now we've got another bearish divergence. If I draw out the trend line between that high and where we are today, it's hard to see there, versus that point to that recent high, that's still a bearish divergence. So we expect another pullback to that level somewhere in that range there. I won't draw the target, but you can see where it roughly will play out. That's on the weekly. And on the daily, we had another bearish divergence here. Remember, these are all independent from each time frame. And we've drawn a target range here, and that goes back to the significant low. And at 23.38% level, now it's sort of hovering around that resistance at 58.82, and we may see a pullback. You'll notice the CCI is broken below the moving averages, so that's a bearish outlook. So we might see it start pullback any time now. Now, if we go to the intraday charts, again, we only take short trades based on the daily. If I turn on the short arrows, you can see there the latest trade you would have taken was that point there when it broke below the CCI there. And the price also broke below the moving averages of the price chart. And on both instances, you'd still be in a trade because that CCI hasn't gone into that moving average range yet. So you'd still be in a trade for the S&P 500 going short. Now the NASDAQ has giving us another bearish divergence on the CCI versus the price chart on the monthly. You can see there very clearly lower highs on the CCI versus higher highs on the price, and I've drawn a target range there. Now that would have been from that previous point, so it would have changed very slightly, but I'm not going to change that at the moment. But you can see there's roughly going to be a pullback to the very least at that point. And on the weekly, that's also a bearish divergence currently. You'll see there that's almost a double top at the moment on the price versus lower highs on the CCI. So I'll draw that as well. That's actually very slightly lower. We may see it go slightly higher as well versus a declining CCI high. So again, that's another bearish divergence on the weekly. And on the daily, that's actually almost hit this key resistance up here at 27.60. Now you'll notice the CCI is broken below the moving average range, a very thin moving average range, but it's broken below nonetheless. So just be careful of going long. I'd like to see a break above this resistance and a more stronger bullish move on the CCI to be more bullish. But at the moment, considering it's a bearish divergence on the monthly and the weekly, I'd be very cautious about going long on the NASDAQ and the S&P, to be honest. Now, if we go to the intraday charts, again, going short only based on the daily, that would have been the latest trade you would have taken when it broke below the CCI and also below the price moving averages, and you'd still be in a trade today. The CCI hasn't penetrated that moving average range, neither has the price chart. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.